Right to the floor show. Joining me now, Matson Money founder and CEO Mark Matson and Circle Squared Alternative Investment CEO Jeff Sica. Mark, what are you trading on, if anything? Is it going to be the CPI number, the earnings from the big financials? And then, of course, that just opens the floodgate for quarterly reports.
Yeah, I want to issue a warning to investors. You started off the show talking about the Magnificent Seven. Most investors are dramatically overweighted to just those few stocks. I call it the S&P 500 cult. Do not drink the Kool-Aid. Look, it was up 24% last year, the S&P, but half of that came from just these seven stocks. And historically, if you don't learn history, you're doomed to repeat it. From 1995 to 2000, the S&P made 22% a year. NASDAQ stocks made 45%, but then they lost, large stocks lost 50%. Tech stocks lost 75%. Most investors have no idea how much danger they're playing with. You got to diversify because no one knows with their crystal ball what's going to happen. You got to own small. You got to own value. You got to own internationals. Don't get caught trying to overweight just to those seven stocks. Big danger.
Sica's not a member of the cult. I know that. But Jeff, what are you joining when it comes to groups of sectors and names, subsectors?
Well, I mean, I think, Liz, the primary focus for me is that I'm looking at the inflation as being the number one worry, because inflation is the carbon monoxide of the economy. Why the market is being so volatile? It's trying to get a handle on exactly where we are with inflation. So what I see is I'm paying a lot more attention to these economic reports, and I agree 100% with Mark in saying that people have been over allocated in those seven stocks. If you take NVIDIA out of your portfolio, if you're in NVIDIA, you haven't had the returns that a lot of people had, and you can't chase yesterday's stocks and expect the same returns.
Okay, I know that we have a lot of viewers who absolutely adore some of the Mag 7, but also the sort of halo effect out there, whether it's Palantir, Mark, or some of the other names, notwithstanding the fact that many of those have given people's portfolios a huge boost. You said the way to diversify is to go international and small and mid caps. Let me tackle the international part of it. There's a big world out there. Which countries?
Yeah, well, to answer that in the short, all of them. We're actually in 76 different countries. You know, markets are largely random. You never know what country is going to be the winner in any one period of time. What I can tell you, over the last 10 years, the U.S. has been at the top, which is a very dangerous sign for investors. So Asia, Europe, you want to be diversified even in emerging markets. And I agree with Jeff on this inflation thing. Look, most investors are kind of playing out on the yield curve into longer term bonds. Inflation goes up, you're going to get killed on those bonds. So have short term, high quality bonds in your fixed income. That way, if equities do crash, you can rebalance, sell that fixed income, buy them while they're low. There's a very hard discipline for people to follow, but diversify internationally in all the countries, and then rebalance on the highs and lows. Yeah, easy to say, hard to do.
We are cycling through a bunch of different ETFs that are country focused, but then we basically found the IEMG, the iShares Comprehensive Coverage ETF, 76 billion in assets right now, cost efficient. They've got core emerging markets. And interestingly enough, one of their biggest holdings is a bank in India that you absolutely love. So, folks, when Mark or Jeff comes on and says, I like this foreign stock that is a little bit difficult to purchase on U.S. exchanges, HDFC, which is that big Indian bank, is within IEMG, that basket of stocks. To you, Jeff, give me a sense of your outside trade at the moment. You know, we've got these wildfires, and of course, it's a horrific from a human suffering standpoint. But there is actually something regarding real estate you've been looking at.
Yeah, I mean, I think what I'm looking at is there's going to be a tremendous need when all of this chaos ends. There's going to be a significant need to rebuild what's been affected and destroyed in California. I think that there's going to be a lot of focus on the government and banks. I think what we're going to have to see is we're going to have to see the private equity firms step up and begin to direct money towards California. I like stocks like Ares and Blue Owl, companies that are in the private equity, private credit space. And I do think the banks are going to have to unlock some of this liquidity that they've been holding on to for so long and begin to deploy and begin to lend it out to rebuild one of the most important states in America.
Yeah, Ares Management, and you also like Blackstone. They have scooped up a lot of homes over the past several decades, I think since the financial crisis, I believe. Good to see you, Jeff.